let's shift gears a bit and talk a little bit about how an established venture fund successfully might start to transition to the next gen fund of managers within the fund. And it's interesting to me. It's a topic that that I have counseled many groups on the mechanics of how do you do that. And some groups, I think, have done it well. Some groups have done it maybe not so well. But the first question I'd maybe ask is, as from an LP focus. So it's almost always assumed that succession is good, that firms need to be able to move it down to the next generation. But might there be groups where the next generation, frankly, isn't really up to the task? They're not as strong as the current generation, and where you might say, yeah, maybe succession someday, but not with this group and not now, and I'd rather see the old guys hang in there for 2 more funds. But how, as an LP, do you start even assessing sort of the strength of the team, and whether this fund is waiting too long to start the process of succession or doing it too soon? Any thoughts on that, Georganne?
Well, it's got to be on a case-by-case basis. Every firm is different, every team is different, every culture is different, and so each transition is going to be different. In a perfect world, what I see in an established firm is 3 generations of partners. You've got maybe the founding generation who's still hanging around. Maybe they're not doing new deals, but they're there quite a bit, and they are very actively mentoring the rest of the firm. Then you've got a second generation of partners that is the current leadership. Leadership has been transitioned to them, economics have been transitioned to them, and they are the active partners of the firm. And then you've got the next generation that's being raised up within the firm, being mentored, being taught the business, learning from the experience of the more senior partners how to be a good venture capitalist. And I don't know very many firms that are quite in that position, but that's what, as an LP, you like to see, because then as an LP, you want to invest with a firm over 3, 4, 5, 10 funds over a very long period of time. It's hard to, but that of course doesn't always work. So if it's not working, what you want to see are the few people that are successful in a firm then splitting off and creating new funds and rebuilding when that transition doesn't work well.
And Judith, let me ask you, how much interaction do you have with some of the younger managers of a venture firm, and how might you even form your opinion as to whether they're strong enough to either take over a bigger role of the current firm they're with or break off if they were to form their own firm? Is it based on little snippets you see at annual meetings when they present some of their companies? Is it based more on just track record? Which deals are they responsible for, and how have those deals done, or is it something else?
Well, it's the 2 things that you mentioned, and then it's something else. I mean, we think it's incumbent upon us to get to know everyone in the firm who has, the opportunity to write a check or contribute to the writing of the check. And so, that's just part of our overall, understanding of the gestalt of the firm. And, over a period of time, you do have an opportunity to form a view about these younger people. But it's all about, who is potent and who is relevant in these firms. And when, are they today or were they before, and trying to assess talent based on that. So, you could have a young person who, maybe has done one deal or has contributed to one deal, but you find out, through talking to entrepreneurs that they're actually quite good. They're very well regarded, and while they're young, they don't have 10 years of track record. They're very well regarded as sensible, sensible people who can, help the companies. We like that. We like that a lot. And when you see those people getting more responsibility over time, then you can tell the firm is going in the right way. Sometimes you see those attractive, young people, and they're being throttled back, and that's never, a good situation, because they're threatening somebody higher up. And generally speaking, those kinds of people will move on because the environment is not correct for them to really take on more responsibility that they have in fact earned. So we spend a lot of time talking to the younger people in the firm and trying to see if they're well regarded amongst the entrepreneur community. And I think that you really, trying to gauge the regard amongst the entrepreneur community is really so important for people in jobs like ours here, because, you know, venture firms with big brand names, you know, have a couple of constituents. They have the LP constituent, and if you've got a big brand name and you're on Fund 10, you know, you probably have a brand with the LPs, right? And maybe you still deserve it, and maybe, you know, you earned it in Fund 5 and you haven't earned it since. It could, you know, comes in all flavors. But where I think it's really important is to figure out, do these firms still have brands? And the partners within the firms, young people and old people, do they have personal brands with the entrepreneur and the entrepreneurs that matter? And that, to us, is really the key relationships that we're trying to assess. Not are they on Fund 12, but do the people inside the firms today still matter with the entrepreneurs who matter?
Malcolm, let me ask you, do you look at how the economics amongst the GP group are allocated when either if your existing investments or if you're looking at a new investment, and if you've assessed that perhaps that the senior people are not moving enough of the economics down to the really talented young people, would that be something that would concern you?
It's something we definitely look at, and it's always a conversation. And you know, if it's an existing relationship we've had for a long time, it's a conversation that's been going on for a while. If it's a newer group, it's sometimes simpler. That the economics are pretty straightforward because there's really no carry to think of for a few years. But it's always a conversation we have, and if something stands out where it's not being shared fairly or appropriately, we will definitely have something to say.
Have any of you looked at a deal and perhaps passed on it because even, let's say, retired partners have extracted a deal where they continue to have economics from the fund that they formed, and you've looked at it and thought that this just looks broken, there's not enough left for the people who are really going to have to do the work to make this fund successful? Have any of you seen a deal like that? And if so, would you give that as your reason for why maybe you didn't invest? Anita, have you ever looked at a deal like that?
Sure. I mean, I would say, you know, when not moving forward with an investment, it'll be a combination of factors, and you know that will be one that we'll look at. And obviously, it's a negative if there's not enough economics around to motivate all the key people that are, you know, actually doing the work and that will need to drive the performance of the fund. But I wouldn't say that would be the sole reason. You know, if we see that even in that type of situation, that there are reasons why people do stay within that firm, then you know that can be balanced. But
Georganne, could you ever see yourself having a conversation with the senior people in a firm about a concern that the economics are not being pushed down enough?
Absolutely. We want to see everyone in the firm have their interest aligned with each other as well as with the LP. And we want to see everyone incented to work hard and do their best and create as much value as possible for all of us. So if the economics aren't shared in a way that incents people properly, then it's going to be a problem, and it's not necessarily the firm we would want to invest with.
So when I think of a next-gen fund manager, especially some of the super angel groups that I'm familiar with, many of whom are investing in very innovative types of Web 2.0 companies. But are we seeing those people do any innovation around the terms of their own VC fund setup, or are groups like that just coming out with the regular 20% to 2% terms? Judith, do you have any experience with that?
The ones we've seen, there's really very little innovation around that, around terms. Although I will say that the GP contribution in these funds is so much higher than you see in a standard fund, that there is a sort of, in our view, an improved alignment in those situations. On some occasions they can contribute some of their previous investments to a fund. That of course makes it a different kind of analysis, but that can actually be a positive if you like the companies that might be contributed from it. And so that's not really exactly a change in terms, but it is a bit of a twist on sort of just the standard fund formation arrangement, I think.
Without getting into our strategy, I think there are terms that LPs are looking for, and to the extent someone who's looking for money can find answers to those term requests, you can enhance your likelihood of raising a fund. And those three, one at least was mentioned by Chris Duvos, I think is his name, I don't know him, but on the prior panel. Length of life of the fund, whatever you can do to find a way that it's not a 12 or 15-year live fund matters to a lot of LPs, because it affects their planning and their cash and how they get tied up. Whatever you can do to get the investment period shrunk so that it's not 5 years, but it's a year and a half or 2 years. Whatever you can do to get more transparency into what they're going to be investing in, which I think Judith just alluded to, in funds that maybe bring a couple of deals with them as they get formed. Those are things that, at least in my experience, LPs are really paying attention to today and can affect your ability to get your fund off the ground. I don't know if my fellow panelists would agree with that, but that's my perception anyway.
It just seems like a hard, particularly on the term of the fund, and getting early liquidity is a challenge. The venture capital is for patient investors, and I don't think I've ever seen a fund close after 10 years or 12 years or maybe even 14. And I remember one fund that didn't close until 20 years after, but they had a spectacular win at the end of the 20th year of the fund, and then finally shut down. It's not for the short-term minded.